Hello, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing podcast. So glad you tuned with us tonight. My name is Cody Laughlin. I'm your host, and joining me, as always, is my co-host, Mr. Brian Alfaro. And we have another very special guest with us today, talking about an intriguing topic here. So really excited to dive into that. So, Brian, what's up, my friend?
What's up, Cody? Nice to see you again.
You as well. It was just 5 minutes ago. We just jumped off another recording. So
I cherish every minute, man.
Every minute. That's right. So tell us who we're talking to today, buddy.
All right. Today we got Mr. Eric Martel in the seat. Eric purchased his first apartment building at just 18 years of age while still at university. Well, I definitely want to talk about that. After graduation in his position as an actuary, he was dismayed to see hundreds of company pension plans being rolled over to 401ks, shifting the retirement risk to employees. This made Eric reconsider traditional beliefs about retirement saving, and question his role as an actuary. So he joined the lucrative technology industry. A few years later, Eric lost a fortune during the dot-com crash of 2001, and he started looking for ways to earn passive income and stop trading time for money. He started various businesses, including a gourmet soft company, but eventually came back to his first love, real estate investing, and informed Martell Turnkey. After just 4 years of rapid success, he was able to retire from his day job. Today, Eric wants to share what he has learned through his own experience so that we don't make the same mistakes he did. Financial freedom should be everyone's number one goal because it is inevitable, and the best way to achieve that goal is through rental properties that generate passive income. Amen. Welcome, Eric.
Thank you, Brian. Thank you, Cody. Thank you for having me.
Absolutely, man. It's a pleasure to have you on, and always appreciate connecting with new investors in the space, especially ones that have a successful, lengthy background as yourself. It sounds like you started some time back and you've been through a couple cycles. So we'd love to kind of talk to that, but tell us a little bit more about your background.
So as Brian mentioned, so my first kind of like dip into the real estate was when I was at university still. And basically my parents were just like normal people, day to day, like 9 to 5 kind of workers, and basically living paycheck to paycheck. So low middle class in the middle of nowhere. And I knew one thing for sure is that that's not the life I wanted to have. And I didn't want to be stuck in that 9 to 5. So that's when I ended up into the trying to find another way. And I knew I would end up in business somehow. And then when I was at university, I met a real estate investor who was just a normal guy. He was a community college teacher. And he had built like a 36-unit apartment building, with, different financing and all of that. And I was just like, it was really mind-blowing for me. And he basically said that he would mentor me. And I said, okay, let's do that. And so at 18 years old, I basically bought my first 8-unit apartment building. Probably, I would say like a D-class neighborhood, but it was no money down because I had no money, and then but it was cash flowing. I had basically the first mortgage coming from a credit union, and then I had the rest was a vendor take back, seller financing on a second, and then the only money that I put down was the application for the loan for the credit union. I think it was like $75 check that I had to write, and I think I had like $120 in the bank or something like that. So I remember writing that check. I said, I hope this works.
That was the best $75 you've written, right?
Yeah, exactly. So that was a good experience. Unfortunately, I didn't have my goal at that time. I was so young. I was studying to be an actuary, so that's kind of like the road I was on. I was not really, that was just proving that I could do real estate. I could make money outside of the 9 to 5 job. And then, so I kind of get tangled up into the actuarial side of things to make more money and all of that. And then I was thinking that I would eventually invest in real estate again once I had enough funds. So fast forward a few years and all of that, I end up in California and in 2000, just before the dot-com crash. and I had like a lot of stock options, and the whole thing went down. So yeah, so it was not too good. I was trying, so then I said, okay, well, this is it. Like I want to have passive income. I'm tired of this thing, and I want to be in control. So, investing in the stock market, I mean, you don't have the control of the company, the direction of what's going on. So that was something that was important to me. I started some other businesses, a gourmet sauce company, a low carb grocery store, and all of that, independent consulting, and so various businesses. And then none of them kind of like, I would invest some time and effort in them, but they would not come basically in the end, it didn't generate passive income. I would have to constantly put more and more time into the business in order to break even, basically. So cut that off. And then one of my sons came to me and said, "Hey, I want to invest in real estate." I said, "Oh God, we're going back to that." And so initially it was not even, I was just helping him out, and then we decided, okay, well, let's get something bigger. Let's get this going. We tried all kinds of different things, flipping. We tried to do commercial here in San Francisco when I lived in San Francisco. And then eventually we said, okay, let's do the passive income. Let's do let's look out of state, look for the right market to do cash flowing properties where we are going to be. We're not right in San Francisco. We felt like we were the small fish in a big pond, and we wanted to be the bigger fish in a slightly smaller pond. So that's when we started looking out of state. We started looking in Memphis and in Cleveland and St. Louis, etc., and started investing there. And the first single family rental that we bought was in Memphis, and I think we bought it for like $40,000, put $20,000 down, rented it for $750, and refinanced it. And then we said, "Oh, well, this is great. Let's do two more. Let's do two more." And then we kind of like doubling up like that. And eventually, yeah. So we started Martell Turnkey, where we because a lot of friends and people that we knew wanted to. They said, "What are you guys doing?" Like, and then they wanted to invest with us. They wanted to buy these rental properties, and that's kind of how we got started with the turnkey business. And then with the funds from the turnkey, then we invested into apartment buildings. So, I mean, this is kind of like the path that we have kind of laid out for our investors that are looking for passive income is, to start with single family rental, get familiar with that, make sure that this is the right thing for you. And you're in control of kind of like a small portfolio of rentals, and then kind of like move your way into a multifamily. This could be a good approach. Either do a 1031 after that into a multifamily, or do some other things. So that was kind of like there are obviously other paths to get to financial freedom and passive income, but that's kind of like the path that we have laid out for our investors.
Yeah, I like that, Eric, and I really appreciate you sharing that. And I would I'm inclined to think that most people coming into the commercial real estate space have taken that very similar trajectory, right? Mm-hmm. Where they start in the single family space. Maybe they try, like you said, fix and flips, maybe do a couple turnkeys, whatever the case may be. But they kind of build a portfolio over time. And then as they do more transactions, or as they acquire more assets, then they end up going and scaling up a little bit more. Yeah. And, listen, as multifamily investors ourselves, we love the economies of scale. We always encourage that anybody can do this space, but it's all about your comfort level is. And I think the most important thing is you just got to get started. And I love your story, how it started when you were just 18 years old. You bought a D-class property, no money, but you know what? You went and found a way. You got a seller finance deal. And, and again, the takeaway there is just you put yourself out there and you just got started. And then you just kind of let the chips fall where they may. So, and going back, tell us what were some of the barriers or some of the challenges, excuse me, you faced as you kind of started to build your portfolio?
So as we got started, obviously we had to find the right market. So finding the right market was key. And then so we looked at we knew we didn't want to be in California because we wanted to have a landlord friendly state. So not because we were planning to evict a whole bunch of people, but just because we wanted to have it somewhat fair and not too expensive. If somebody is not paying the rent, that we want to be able to to get paid, because it's important. We want our, we're planning to live on the income from that property. I can't have people not pay. So that was one aspect of it. We wanted to have, we didn't want, in order for it to cash flow, it's kind of a special situation too. You don't want to pay too much for the property, and you want the rent to be high enough so that it pays for, all the expenses and the mortgage, and then it cash flows. So it's kind of a specific market that you have to find. So looking for, the 1% rule is a good way to do that. But we were also looking at business diversification at the macro level, business diversification, low unemployment, and also a growth, but a sustainable growth. We didn't want to end up in a market that was growing so fast that then the market, like San Francisco in those days, when it's growing so fast, there's not enough, and then the prices go up rapidly, and then it doesn't make sense anymore. So we wanted to have a little bit of growth, like around the 1% kind of growth in population, good business diversification. And then after that, it was, once we identified the market, it was identifying the team. Who are we going to have on the ground? Because we were planning to stay in California, live in California, but investing in these other markets, we needed to have someone that was that worked with us and worked like us, that was very responsive, and be able to communicate at the same level. So realtor was a key element to that, and so many realtors are not they're not familiar in on the single family rental at that investment space and working with investors. Obviously, in the commercial space, completely different, in apartment buildings and stuff. But so it was hard to find a realtor that would be able to understand what we were looking for, but we did. So we found one in Memphis, we found one in Cleveland, and then it was that was great. And then we started wrapping up the property management team, and then the contractors, etc. And so that worked out great. Right now we have about three contractors or renovation teams in Memphis. We have Martell Construction in Memphis, and one of my son is leading that right now. In Cleveland, we have about 10 construction crews, and then we have a big team there, like a property manager and realtor as well, has a team to manage all that. We're ramping up in St. Louis as well, so we have a good team there that we're just testing, right? So we just have like one property right now, and then seeing how it is, and then if that goes well, we're going to double up, and we're going to continue to increase that market. We're also looking at Detroit right now, so kind of like try to crack that nut, which is not that easy. But I think we find the right person there. We think we found the right market, the right neighborhood, and we're going to start making some investments in there in the next couple of weeks, couple of days even.
Nice. Well, You basically kind of laid out the foundations of building your business the correct way, right? Looking at good concrete fundamentals when targeting a particular market to invest in, even if that means going outside of your backyard. You're putting together professional teams in these target markets to help you operate your business and find the right acquisitions. And so, I hope that this is resonating very well, because this is a message that you hear very commonly across the space. But this is why, because these are the key components of building any substantial business, no matter if it's single family or commercial. So really appreciate you sharing that. And what's interesting, you talked about investing outside of your backyard, being on the West Coast. We're living that day to day right now, right? Where you're seeing this massive influx of liquidity and capital coming from the coast here into the Southeast, the Midwest. And in turn, what's happening is those of us who are here in the Midwest, we're starting to look elsewhere, right? We're starting to go and look in secondary, tertiary markets and whatnot, because, just the challenges that, comes along with that competition. But nonetheless, the point being is it's okay to get outside your backyard, as long as you have good fundamentals in place. So appreciate you sharing that.
And when you think about it, I mean, we couldn't have done that like about 15 years ago. I mean, this is the only reason why we're able to do this is because of the iPhone and other like smartphone, where you can take videos and pictures and send that directly. And the texting is omnipresent, where you can do electronic signature, all of that. We couldn't have done that, 15 years ago. I would say even like 10 years ago. It was not, the technology was not really there to do that. We would have had to fly there, meet people, and then, but now, this technology is really opening up the boundaries, and it's really about finding the right market and building the right team.
Yeah. It's interesting about real estate in general. I don't know why this is, but I was on a webinar earlier today, and the conversation of technology in real estate was the topic of that webinar. And what's interesting is real estate has kind of lagged behind as a sector when it comes to adopting technology. But to your point, look what happened in this past year, 2020, and COVID, where everybody was grinded to a halt. You were locked in your homes or whatever. You couldn't get out and go do anything. And so if you didn't have that digital presence, if you didn't have technology to rely on, you were just dead in the water, And so, being in this digital age, it's so important to lean on that. And both from a business perspective, but even on the asset level. And I'd be interested to get your thoughts, or like, are you incorporating any technologies into the assets itself that you're buying in, and whatnot?
So you mean, no, we're not really using any technology on the assets. I mean, we're just kind of doing a basic kind of renovation. Where we're using technology is on allowing people to go and visit the vacant units. So we're using something called Turner. What's that called? I forget what it's called, but it's kind of something Turner. And then basically people can book to go and look at the apartment. They get a code and they can go and check it out, and then decide if they want to do that. So we have a lot of these, we use these kinds of technologies, also the marketing of the apartments when they are available. So this is all, pretty automated and then sent out. We use a lot of technology for the operations of our business. So we have a massive customer relationship management software with tons of automation. So we do 150 single family rentals a year. So we have all kinds of automation that says, hey, make sure we send an email to the insurance company, the insurance broker, and say, hey, we need insurance for this property starting at this date, blah, blah, blah. And then we need to, and send to the lender or send to, so all kinds of different communications that are automatically sent depending on the stage of the process for that particular property. On the apartment buildings, on the marketing, we have a lot of automation on the marketing side of it. That's where we have most of the automation, but not so much on the property itself.
Yeah, gotcha.
Mm-hmm.
Well, just something like you mentioned, we're having that platform that allows people to go in and tour the property without having a physical person being there. Having maybe keyless entry. Keypads or whatever to get into the access or the units, excuse me. I mean, those are the things that I was kind of alluding to, because, I think COVID for many people has changed behaviors, right? Where the social interaction or the need to have personnel readily available may shift and may change. And so, again, just leaning on these technologies, I think is, going to be pivotal moving forward for sure.
Yeah. And one of the, I remember the name now, it's called Tenant Turner. That makes sense now all of a sudden. I was thinking Tina Turner, but it's not the same. But yeah, so I agree. I think there is going to be it's probably going to be more technology that's going to be coming into the apartment building space and stuff. Yeah, for sure.
So Eric, looking at your portfolio, what would you say is the division between single family and apartments or commercial? Like, are you more heavily invested in the single family sector, or are you more heavily invested in the apartment sector?
So in terms of holding, on the single family rentals, we're not holding any single families at this time. So we've sold our single family rental portfolio. So the only thing that we're holding right now is the apartment buildings. And some of these apartment buildings, we actually selling some of them as well. So we've sold one in January, we're selling another one in March, and then we have another one for sale right now. And basically, we want to take these funds and then put it back into the turnkey rental, because we need more and more funds to basically finance the turnkey business, because we really want to.
Good time to be selling.
Yeah, it's a good time. Yeah, and it's also I mean, the turnkey is doing fantastic. We're doing is doing very, very well, and we have more interest than ever from the turnkey investors, and then from everybody else that we're talking to.
Yeah, well, that's exactly why I was bringing that up. And Brian, I appreciate you saying that, because there's this correlation between the success and appreciation of single family and the success and appreciation of commercial real estate, in particular multifamily. They are directly correlated, right? And in understanding where we're at in market cycles is so important to your business strategy. And so, as Brian mentioned, and he knows this all too well himself, it is a phenomenal time to be a seller right now in both single family, residential or commercial. I mean, it is crazy just to see how fast products or assets are just flying off the shelves. And so we're a multifamily focused show, right? That is our model. That's what we're biased to. But I want the listeners to understand that, understanding where you're at in market cycles and being open to different types of investment strategies, can really yield you a lot of great opportunity. And for a lot of people like yourself, Eric, I got to imagine that if you're doing single family turnkeys, as you mentioned, you're probably going to have a very, very good few years, ahead of you, just from the momentum that we're seeing in the space.
Fingers crossed.
Yeah, knock on wood, right? Knock on wood.
Yeah.
Not jinx anything.
Yeah. But for us, I mean, we are in a very particular special situation, right? So for most investors that are looking to generate passive income, they would just invest in apartment buildings, and they would just hold for a long period of time. And that was our plan. But then we thought, okay, well, let's just get kind of like keep growing the company. And my sons are younger, obviously, and then they want to get going. They want to grow this company to its limit. So that's why we kind of like decided to shift that into a little bit more the turnkey rental space. So yeah, we are in that very specific or special situation that most people don't have. They don't have like a growing turnkey rental business that they can invest in. So that's one aspect of it. The other aspect of it is that, so obviously we're looking at the returns. We're looking at our returns on an apartment building that we're holding, even after refinancing. If we're looking for a 12% cash on cash return or 15% cash on cash return after refinancing, this is very decent, very solid returns, we think. But then we look at how much we're making on the turnkey rental, and it's not, significantly higher on the turnkey rental, because we're basically flipping and adding value on the projects, and each project is like 4 months So we have a high turnover on that equity, on that cash. So that's one aspect of it. The other aspect of it is that we're planning to use, so our new strategy now is to basically use that cash and do more seller financing. And again, because we bought the distressed property, we renovated it. So now we're going to sell it, do a seller financing. So we're going to have a little bit of cash still left in the property, but our actual yield, our ROI on that investment, if you do seller financing, is comparable to what we would get on an apartment building, without the property management, without the repairs, without the insurance, without, so it's very clean from that perspective.
Yeah.
The only downside to that is that the payment is the same for 30 years. So that's the only downside, as opposed to an apartment building where the rent would actually continue to go up with inflation.
There's nothing wrong with being the bank, Eric.
No, I know. I'd like to apologize for it.
Well, it's really cool. Again, going back to the start of your story, you started out with creative financing, seller financing. You're using it now in your business. And we talk about this a lot. We just had a great guest on our show a couple of weeks ago, Mr. Bill Ham, who talked about this very topic about, you have to have multiple strategies in your tool belt. And because if you're looking to give yourself more opportunity to find deals, especially in the marketplace right now where it's so competitive, you're going to have to be creative, but for you as the seller, seller financing is a very good way, like you said, to kind of offload the obligations of holding the asset, but still get that good residual cash flow, and be the banker. So that's really, really cool. So I like that.
Yeah.
It's interesting. You mentioned your returns on the turnkeys right now, because I was just having a very similar conversation with another apartment investor several weeks ago. And she particularly kind of pivoted from commercial right now for that exact reason. Again, Brian, come on, we've been beating our heads up against the wall trying to find a deal.
So that's the same for us too. Like we're dying for an apartment deal, and then we can't find them. If we had one today, we would buy that. Definitely. That made sense. That fits in our portfolio. Yeah, we were offered a 400 unit, I forget, I think it was like $30 million or $40 million deal. So that's out of our range, but something that's within our range. Yeah. We would jump all over that.
Sure. But that's the problem. That's the exact problem, right? We're competing against, just an incredible amount of liquidity right now that's chasing those same exact product types, and,
that's right.
And so that's the trouble is, okay, do you put your head down, you just keep grinding away and you just keep plugging away in hopes that something will happen? Or, do you pivot and diversify? And listen, we don't offer any advice. We know what our strategy is, what our thesis is, but I think this is going to be very compelling for those who are out there who are maybe in the same predicament where they're just getting frustrated and they can't find the right opportunity. And maybe they're looking for another alternative. And, again, right now, this turnkey space, I know is just on fire right now.
Mm-hmm.
So really glad to hear that. So.
Yeah. So, I know there's a lot of money out there. I just don't know where it's coming from. I know there's to me, like my theory was that, obviously the government is printing a ton of money, that's causing inflation, blah, blah, blah. And then so the money basically is going into assets that and not really consumption. So they're going to the stock market, which is why the stock market is going up like crazy, even though some stocks doesn't make sense. But then what, with inflation, you would think that the money would actually go and seek hard assets like real estate or like gold and stuff like that. But I'm not, like I see the pressure. I see that the value of the properties are increasing, but I just can't point like, how did that money actually flow from this to this? There's no divesting from the stock market. That I see. So it's kind of interesting, but I don't know if you know the answer to that.
No, I wish I did, because we'd probably be in a much better spot, right, Brian?
Yeah,
That's right.
But Well, Eric, I want to kind of highlight again your extensive investing background. I mean, you've been in the space now for many, many years. You started out at such a young age. You've been through multiple economic cycles, and I'm really intrigued and want to talk a little bit about kind of what have you seen from, you mentioned the dot-com crash where you lost a big part of your fortune. You have the 2008 economic global financial crisis, and then now we're the COVID pandemic. I mean, talk us through kind of what you've seen through each of those cycles and kind of what you've learned as you've gone through each cycle.
Yeah, and I think what we're going to see as well is more and more of these cycles and closer together. So I think get ready for that. So whatever investment strategy that you are using, you want to make sure that it's flexible and that you have maybe multiple exit strategies and different ways of looking at things. Don't corner yourself to only one particular area. And you want to have to allocate your assets also a little bit broader. So in the dot-com crash, I mean, I had diversified. I had a lot of stock options. I had diversified some of them, but I diversified them in the stock market. When the whole stock market crashed, then you realize that I was not really diversified. So it's important to kind of go and look at different asset class and really allocate the asset class based on what you think is going to happen. Typically in this kind of economy, when the inflation is going to go up, and it's going up a little bit, and then when there's a lot of money that's being printed, you can expect that people are going to go into harder asset. They're going to go more into real estate. They're going to go into because these are real value, as opposed to a stock that you don't know where it's going to go and what the real value of that is. So that's typically what happens. But when you're in the bubble, like in the dot-com crash in 2000 and 1999, I mean, you feel great. You feel like every investment you make is a winner. You're just like, I'm a genius. And then this is pretty much how many people are feeling, and I've been feeling over the last 5 years. It's just like everything I do is just turn into gold. And then, well, get ready. Something is going to happen.
Yeah, I agree. And you're right. I mean, that's exactly what we've been observing. I think we've been riding this high, for the past 10 years. It's just great appreciation wave. And there was a little scare in 2020, as most people know, but then after everybody took a breath and we saw, hey, we're going to make it through just as fine. Collections are great. We're going to keep moving forward. Now it's just, people are just flocking to the space even more. So don't disagree with you there. I think it's people got to be very cautious right now. You got to, as you alluded to, we talked about this on a previous show, you got to mind the fundamentals. You got to stick to the fundamentals, be patient, and, make sure that you understand where you're at in this market cycle, and make sure your strategies align with where you're at in that market cycle are going to be very, very important. So.
Yeah. And then the investment horizon too. I think for me, like my investment horizon, a lot of people are thinking like, tomorrow, day trader, they're thinking today and stuff like that. Some people are thinking for their retirement, and then, but I'm thinking for my next generation, etc. So I'm building wealth for my kids and for their kids. So that's my investment horizon. And so that changes how you make decisions and how you see things. And so this is why on the apartment building, on the real estate, I mean, this is a great business to be in on the turnkey side, but also on the apartment buildings that we're holding. These are very solid if they're in great location. I know that 10, 20, 30 years from now, these are going to be even much more valuable than they are today. I mean, we're all in Midtown Memphis, fantastic location. And I guarantee you they're going to be more than, probably double or triple what they are today for sure. And then it pays for itself. You get cash flow on top of that. So it's just phenomenal. people are especially in this market. I mean, they're looking at quick returns. Everything is a quick bucks, but they don't look at the overall picture. They keep thinking about the winners and they forget all the other losers that they've done. And so yeah, if you're going to be investing in the stock market and other kinds of maybe other types of investment, have a journal. Like really look at even in real estate, if you flip and stuff like that, have a journal of all the properties, all the asset that you've invested, and then see exactly what your returns are and calculate what your returns are. And this is what a lot of people don't do. They just kind of like, oh yeah, it's a game. It's like it's entertainment, and not really an investment strategy.
Yeah, well, it takes you away. It goes from being an investor and investing to speculation, right? Like you said, you're just trying to make the quick buck, but you're not really minding your fundamentals again, and you can find yourself in some trouble. So great advice there. Really appreciate that. And I want to kind of go back and kind of pivot a little bit. You mentioned you're trying to create this generational wealth for your family. And I want to use that to kind of pivot to talk a little bit about your book. You've written a book that kind of talks about getting away from trading that time for money, and which kind of leads into creating that generational wealth. What was the inspiration behind the book, and what was your philosophy in sharing that message?
Yeah, so again, I think going back to when Brian introduced me, and me being an actuary, and every day I was working on canceling and converting defined benefit pension plan into basically savings accounts like 401k. And people don't realize that, but this is a major shift in the retirement, and that's been happening for the last 30 years. And basically, defined benefit, people don't even know what it is anymore because nobody has that. But this was a pension plan that basically tells you that at retirement, if you continue to work with us at retirement, we're gonna pay you, let's say, 50% of your final salary. So if you make $100,000 at retirement, we're gonna pay you $50,000 a year guaranteed. We don't have that right now. Right now, it's a savings account, a 401k, and then you have X dollars. How much do you need to save to get that? How much do you? What kind of a monthly payment are you going to be able to extract from that money? These are all unknown until you are there, and until you know what health condition you're in, until you know what the interest rate is. All these things, all these factors are important when you're about to retire, when you want to convert that money into a passive stream of income. And then, so that's kind of like, I want people to kind of take action and then find another way. And real estate is a fantastic way to build that passive income, apartment buildings or single family rentals, any kind of rental space. That real estate is a phenomenal way to build the wealth with the equity, but also build that passive income. And so that's why I thought, okay, well, I need to kind of explain to people what do you need to do in order to get there. And the first part is really about the mindset, and share a little bit about my experience about when I bought my first apartment building, and how everybody was telling this 18-year-old guy that, what you're looking for doesn't exist, up until I found it. Then they say, oh, okay. But, that's, so keep looking at it and know that it's there. And then, but yeah, the mindset is key. Then after that is also about the knowledge, being able to know exactly kind of like what an opportunity looks like. So having some minimal financial knowledge, and then coming up with a goal and a strategy, but a strategy that is in line with your resources. How much time do you have to devote to that particular business? How much capital do you have right now? And then what are some of the skills that you have or the skills that you can bring from other people that can help you achieve your goal? Maybe you can do it on your own. Maybe you have to partner with somebody else or whatever, but really come up with look at the resources that you have and then be realistic about kind of how you're going to execute that strategy. So if you have no money, going into an apartment building is going to be a little bit difficult. If you don't have a track record, if you don't have, the right person with you, it's going to be very difficult to get there. But you could do maybe wholesaling or something like that to kind of build that capital. If you don't have time, wholesaling is a little bit, it's a little bit time consuming to get that done. So really looking at these resources and then picking the right strategy. So that's why I have this book, and then really kind of walking the reader towards, what's one step at a time. This is what you need to do. Identify your market, identify the opportunity, your investment criteria, build a team, blah, blah, blah. And then hopefully by the end of the book, I'm walking really the reader through the whole process. And I'm hoping that by the end of the book, they're actually going to have a deal closed. And then finally, it's about kind of scaling up. So how do you repeat that? So that's the other thing too about stock market. It's hard sometimes to repeat. You can't repeat the same deal over and over. But in real estate, you can. I mean, we're doing that 150 times a year. Repeating this is basically the same deal that we're doing every month. So it is a repeatable process that has a specific return that we can expect, that we can count on. So, this is a great business to be in.
Yeah, it sure is. And we love it. And, as you mentioned, it takes some work and it takes some putting yourself out there and getting out of your comfort zone. But, it's about surrounding yourself with the right people, building the right teams, getting educated and, just taking the step of faith, man. You gotta get out there and we say this all the time. Rome was not built in a day. You're not going to go out there and become a millionaire overnight. You got to put one foot in front of the other, and it's a long-term game. So, I definitely am interested in sharing your book with others. And so hopefully we can help share that message with them. And there's others that are just now starting out that needs to hear that message. So really appreciate that. But
and actually for your listeners, so right now my book is sold, the Kindle, the ebook is sold on Amazon for $10. But if they go, your listeners go on my website, marteleric.com/giveaway, they can just give me their email address and I will send them a free copy of the Kindle ebook.
Excellent, man. Appreciate that. We'll make sure that's in the show notes and we'll make sure to reference that. And
I don't want that book, the price of the book, to stop you to achieve financial freedom.
That's right, man. Amen to that. Amen to that. Well, Eric, man, listen, this has been a great conversation. Really appreciate, your insight and learning more about your background. And I know there's a lot of listeners that's going to pick up a lot of good nuggets from this. So really appreciate that. But before we go, we got a few more questions for you and then we'll wrap up. Okay.
Yep.
So, one of the things we like to learn from everybody is kind of what you're doing in your own continued education to further your investing.
So I read a lot. Obviously, reading is key. As in these days, I read a lot about the economy. We're in a very particular situation right now that is very tricky, and so I'm reading a lot about that. And actually, just before this call, that's what I was reading. But one book I think that's very important. So Ray Dalio, he wrote. If you go on his website, Principles, he has a book where he talks about the economy, and he talks about how the economy, where we are today, has kind of happened in one way or another throughout history, and he really explains, I think, very well all the key kind of drivers and the key drivers of the economy and what's impacting kind of like the different aspects. So I think this is a good read. I think it's also, you may have to read it a couple of times to really get all the little nuggets in there. But I think that's what I'm doing right now. So reading a lot.
Excellent, man. Excellent. What have been some of the lasting lessons you've learned along your journey?
Lasting lesson. Oh, so that's a good one. So I think I would say focus. I think this is important. So you focus on obviously your goal, that's fine, but focus on your strategy. This is where people get lost a little bit, and this is why I mentioned knowing the resources that you have available. So really identify a strategy that works for you, and then you keep going at it. You keep focusing on that. I see a lot of people that they decide to go with flipping, for consumers and stuff like that. Then they go in that, and it's just like this, they get a certain return. And then they hear other investors say, oh no, you can go in here and you can go a better return. Then they switch strategy, and then they would go and try to do that strategy, or do wholesaling, and then do commercial and do this and do that. So it's much more important to work on your strategy and refine it, find the right, maybe that's not the right market where you're trying to implement the strategy, but really tweak it. If you make a little bit of money, you're on the right track. Then the question is, how do you tweak it to make more money? And often, so there's all kinds of different ways to tweak it and make it more, maybe it's the wrong market, maybe it's the investment criteria that's slightly different and all of that. But yeah, really work at your strategy, really clearly refine it to really extract its maximum potential, I would say.
Excellent, man. And to kind of piggyback off that, what would be a piece of advice you'd give to the listeners to help them grow their business?
Help them grow I think it's build the right team. I mean, this is it's all about the people. It's about the network. So build the right team. And this is a great real estate. I think for the most part, I mean, it's a great group of people. Everybody's sharing with everybody, as far as I know. Like people are asking you talk to an investor and you say, this is what I'm doing, and then they share their experience in their market. I don't really feel a lot of competition, even people that are in the same market that we're in. We share a lot of information, and we never know, maybe in the future we're going to be partnering on some deals. So all the bridges are open, and so it's a great environment. And if you have any questions, you just ask people, you just reach out and ask them what they think. And most likely, these people are gonna share their experience, and they're gonna try to help you out.
Great advice, man. Really appreciate that. So, all right, Eric, tell the listeners how they can learn more about you and get connected with you.
Yeah, so one of the way is my website, as I mentioned, marteleric.com. You can also reach me on Facebook, eric.martel.ca, and on Instagram, e_Martel. Martel with one L.
One L. Got it. Well, Eric, again, thank you so much for the great conversation, man. Really look forward to staying connected. Awesome. and learning more about your turnkey business, man. Thank you.
Great. Thank you, Cody.
Thank you, Eric.
Thank you, Brian.
Thank you.